Options contract. So in this lesson, we will go through the introduction where we see what are options, what are the different types of options, what is a premium of an options contract, and what is the strike price of an options contract. So first we'll take a look at what are options. Options are derivative contracts that confers a right without obligation to buy or sell another asset called as underlying asset. So it confers a right without obligation to buy or sell another asset. That is what is an options. Now, the buyer of the options contract can choose to buy an asset or sell an asset, where there exists a choice to buy or sell with the buyer of the options contract, where the seller of the options contract has no such rights and he always goes with the buyer. So here there are two parties. One is a buyer of the options contract and another person is the seller of the options contract. Buyer of the options contract can buy or sell underlying asset at a price which is decided in the options contract, but the seller normally goes with the buyer. Now that brings us to the next question. What are the different types of options? So there are two types of options contract, first being the call option and the next is put option. So in the call option, the buyer of the options contract has a choice to buy stocks of underlying asset. That may be currency, stock market indices, stocks, etc. from the seller of the options contract at a predetermined price on a particular day. So the buyer can buy underlying asset or stocks of underlying assets, which may be currency, stock market indices, or stocks from the seller of the options contract at a predetermined price on a particular day. Now, that is what is basically one option, which is call option. Now, what about put option? Put option is that actually the case where the buyer of the options contract has a choice to sell stocks of underlying asset. So here in put option, what the buyer does, buyer of the options contract has a choice to sell stocks of underlying asset, that may be currency, stock market indices, stocks, etc. from the to the seller of the options contract. Actually, it is bought from the seller of the in put option, the buyer has a choice to sell stocks of underlying assets. So it is sold to seller of the options contract at a predetermined price on a particular day. So that is how it is put. Now, let us see what is premium of the option of an options contract. Premium is the buyer of the options contract should pay a premium to obtain a right to buy or sell the underlying security. So that is premium. And what is strike price? Strike price, it's similar. It's a predetermined price at the time of buying or writing of an option. It's called its strike price. So that is basically what an options contract is. Let us try to illustrate it with the help of a diagram. So here things, whatever is not clear can be made clear. So there are two basic things here in an options contract. One is options contract itself and the other thing is the underlying asset. So in options contract, there are two parties, just as I was telling you earlier. One is buyer of options contract and the other one is seller of options contract. Seller normally goes with the buyer. He has no choice. Buyer, on the other hand, can buy a underlying asset, which is when it is a call option, or sell an underlying asset, which is when it is a put option. Now, the underlying asset may be currency, stock, or indices. So that is basically options contract. Now, when we come to the underlying asset about exercising the option, in a call option, if the buyer decides to exercise a call option, the underlying asset is bought from the seller of the options contract. So here is where the seller is. He has basically the underlying asset. So that will be bought if the buyer chooses to exercise a call option. So that is what it is. And if in a put option, what happens? Here is the seller. Should the buyer of the options contract decide to exercise a put option, he sells underlying asset to the seller of the options contract. So he has basically the underlying asset. Who has the underlying asset in a put option? It is the buyer. So the buyer actually sells the underlying asset to the seller of the options contract should he tries to execute or should he tries to exercise the option. So that is basically what is options contract. Hope it is clear. Next, we'll take also an illustration, an example of how it is in the National Stock Exchange. Here, a call option may look like INFI September, which is SEP 1600, which is a, what option is this? It is SC actually. So buyer of an options contract would have to pay a sum of 600 into 100. 100 is the price of the option per share. So 60,000 he has to pay if he decides to exercise the options contract on September on a predetermined date. He has to also pay an additional 600 into 1,600. 1,600 is the share price. And there are 600 shares. So if he wants to buy, it's a call option actually. So if he wants to buy it, he has to pay an additional 600 into 1,600, which is 9,60,000 rupees. In the case of put option, there is TCS for November, 2,500 is the share price, put equity, 600 shares, where the options contract is priced at 200 per share. So in this case, what the buyer has to do, the buyer of the options contract would have to spend 200 rupees into 600 shares, which is 1,20,000, plus if he decides to exercise the option, since it's a put option, it's always selling from the buyer of the contract, he can get an additional 2,500 into 600. 600 is the number of shares and 2,500 is the price of one TCS share. So about 15 lakhs he can get from the seller of the options contract. So that is options contract. And now we take up underlying asset in exchange traded options. So we will see here stock options, foreign currency options, index options, futures options, and interest rate options. We'll see what each of them means very briefly. So first is stock options, which is an underlying asset. What exactly is an underlying asset in options contract in exchange traded options? So stock options, you might be knowing, it's options based on individual shares of common stock, which is traded for many years, where standard call options on equity shares started as early as 1973 on Chicago Board Options Exchange. Now, stock options are traded on various exchanges all over the world and are most popular assets. In India, options trade started in the year 2001 in Bombay Stock Exchange and National Stock Exchange. So that is stock options. Next is foreign currency options. What are they? So another important asset is the foreign currency, which is traded in various exchanges, including Philadelphia Stock Exchange. Philadelphia Stock Exchange offers both American options contract as well as European options. So the major currencies traded in Philadelphia Stock Exchange is US dollar, Australian dollar, British pound, Canadian dollar, etc. Next is index options. So what are index options? So in US options market, Standard & Poor S&P 100 index at CBOE, which is Chicago Board of Exchange, and major market index at Amex are traded. Options market index options are traded. Similarly, in India, we have index options traded in Bombay Stock Exchange and National Stock Exchange. Now, next is futures options. So where it is traded, that is the information which we actually have. In futures option, the underlying asset is a futures contract. We will learn about the futures contract in a different session actually. So if the futures option is a call option, the buyer has access to acquire a long futures option. So that is what it is in futures option. Next is interest rate options. What are they? Interest rate options are written on cash instruments or futures, also referred to as options on physicals. These are various debt instruments which are used as underlying instruments for interest rate options on different exchanges. Interest rate options exist for over-the-counter markets for treasury bonds, debentures, and mortgage-backed securities. So that is interest rate options. So these are basically some of the underlying assets in an exchange traded options. These are the different underlying assets which the options contract normally uses in exchange traded options. Okay. We may also have a detailed session on options contract where we may define the determinants of the options price, how an option is priced. That we will see it in a different session. Okay. So for now, we are wrapping financial derivatives options. Thank you.